What's going on, guys? Welcome back to the channel. I know it's been a little bit, and I've tried out some other video styles, but for me, I think it's easier to just hammer out videos like this just on what's happening in the mortgage market and real estate market in Canada. Um, I'll try to go less, off a script and more off the cuff. But yeah, today I guess, we want to dive into a big question, and it's an article that I saw today from a analyst, Ben Rabideau, who believes that the Bank of Canada is actually going to slash its rates to 1.75% by the end of 2025. Okay, so let's break it down in more simple terms and talk about what this could mean for you if you own a mortgage and other possible mortgage holders. And so first we have to take a look at Canada's economy. Okay, so lately GDP per capita, which is the amount of economic output per person, has been shrinking. Okay, and we've been aware of this for a while. It's not great news. It's actually quite bad news, and you've probably seen it, maybe talked about on other platforms before. Economic growth has been heavily reliant in Canada on population growth, okay, especially immigration. But now, with the recent changes that the government is going to bring in over the next few years, immigration levels are expected to decline over the next, I would say, 2-3 years. And without those new people coming in and entering the country, the workforce, the economy, things could actually slow down even further. Okay, and so this brings us to businesses, right? So slower economic growth impacts those people too, right? So when large companies struggle to make profits or to expand, they pretty much obviously stop hiring, right? And we could see more unemployment as a result of this, and that puts more pressure on our economy. And obviously, when people lose jobs or they feel less secure, they cut back on spending. All right, and when they cut back on spending, that's when things can get even worse and slow down even more, and that's not good for the economy. And so how do we tie this into the mortgage market and what's happening with mortgages? So mortgages are definitely something that affects millions of Canadians, right? Millions of Canadians have a mortgage, and homeowners across the country are heading for what's been called as a mortgage shock, right? We're preparing for a mortgage shock over this next year or so. So what does that mean exactly, right? So many people who locked in low interest rates during the pandemic or around 2021 are now up for renewal, okay? And they're going to see much, much higher payments, right? Now, obviously, rates have come down a little bit, from the peak, but still, renewing at, let's say, 4.5, 5% is much higher than at 1.5%, right? And it was 6% actually, and rates were a little higher, but now they've come down. And so their payments, people's payments are going to go up by as much as 40%, maybe more, right? So think about that for just a sec. 40% increase in monthly payments, right? That's a huge hit to household budgets. Now, this is where the Bank of Canada comes in. By lowering the policy rate, they can reduce the cost of borrowing, including mortgage rates, right? It's one way that they can help people manage those high payments, right? And without this relief, many Canadians could face financial struggles or even lose their homes, right? And if we see foreclosures and people losing their homes, that could be a cascading domino effect of just horrific proportions, okay? Now, the specific economist, Ben Rabideau, thinks that the Bank of Canada policy rate is going to be around 1.75% by the end of 2025, which is lower than the other major banks' predictions, such as TD, CIBC. I think they believe that the rate's going to be just above 2%, I believe. And so if inflation, this is what the economist Ben Rabideau is saying, if inflation stays under control, he predicts we could see up to 2 percentage points worth of cuts. That's more than what the big banks are forecasting, which is what I just said. Of course, not everyone agrees with Rabideau's outlook. Some argue the Bank of Canada will take a more cautious approach, right? Especially if inflation shows any signs of heating up again. But Rabideau's view highlights just how uncertain things are right now, okay? And what does this mean for mortgage holders or homeowners? Well, if you're a homeowner, it could mean some relief on your mortgage payments in the future, right? So we really have to see how this next year rolls out, right? We have to keep our eyes on all the data and information that will be released. Lower rates obviously means lower payments, cheaper borrowing costs, whether it's for a car loan, business investment, credit cards, home loans, all that stuff. And so obviously the things that'll affect this forecast are going to be all the data that gets released, right? So GDP data, inflation data, unemployment data, right? If unemployment keeps going up, if inflation goes up, that forecast could just be completely thrown out the window, right? It's just a forecast, doesn't mean it's going to happen. So we're going to have to keep our eyes on that data and see how we develop over the next year and a half, right? So we're almost at the end of 2024. The next 12 months are going to be very, very interesting. So get your popcorn ready, right? In my opinion, I think the market is going to just either take off or just crash. Not crash, but just fall. And, that's really, or obviously option 3 is we just go sideways for a year. And that could happen because we've been trading sideways now in the real estate market for a while. So if we continue trading sideways, that's another option, right? And that might not necessarily be a bad thing. Trading sideways for another year or two might actually be a great thing for the Canadian real estate market, right? It'll allow people to continue saving, to get into the market while prices kind of just stabilize and sit there. Really all depends on what happens with rates. Are people coming in to buy and absorb those prices, or do more houses go up for sale and people don't bid on them, meaning if sellers have to sell, they're going to keep dropping their prices, right? If you need to get out of your house and sell, you're going to keep dropping your price, especially if you're desperate, right? And you never know how desperate people can be. People get very desperate when they need money, right? If they're in a lot of debt, if they have a lot of stress and pressures building up on their back, making them need to sell their home. It's obviously not what people want to do, but if they have to do it, they're going to do it. And I think we got to prepare for that. There's always that chance that people need to sell real estate and prices keep coming down next year. And there's also a chance that interest rates come down significantly and then we get this like surge of demand and prices go up and maybe hit all-time highs. If that happens, it happens, right? We have to be ready for all the scenarios. And, from what I'm seeing, working with, clients, sellers still want these unrealistic amounts for their home that, it was worth 2 years ago. And I think now, if rates come down and keep coming down and come down aggressively, it might allow that buyer pool to get stronger and just be able to bid for properties again and maybe get some momentum in the market. So we're really going to have to just watch and keep our eyes on it. I really appreciate you guys watching the video. If you enjoyed it, please hit the like button and subscribe for more videos like this. And of course, if you guys want any information on getting in contact with me about mortgages and real estate, put my information down below, and I will see you guys in the next video. Take care.